Hi, everyone. I'm Assemblymember Rebecca Bauer-Kahan, and I represent the 16th Assembly District in Sacramento. Our district includes the communities of Livermore, Pleasanton, Dublin, San Ramon, Danville, Alamo, Walnut Creek, and La Miranda. The California Department of Financial Protection and Innovation, or DFPI, is partnering with the Campaign for California Borrowers' Rights to inform borrowers about all the changes to the federal student loan programs since the beginning of COVID-19. And since President Biden recently announced debt cancellation for all student loan borrowers, the Campaign for California Borrowers' Rights is the state's leading debt coalition of diverse organizations representing students, workers, consumers, older borrowers, communities of color, veterans, and millions of other Californians affected by the student debt crisis. The campaign is co-led by Next Gen Policy, Student Borrower Protection Center, Student Debt Crisis Center, Young Invincibles, and Consumer Reports. We know borrowers have lots of questions right now, and they need to hear correct and complete information from a credible source so they don't fall for all the scammers. I know I'm getting calls. That's why I've invited student loan experts to talk to us tonight. Tonight's student debt workshop will help us understand the basics about student loans, give us accurate information on the status of the student loan programs, how to access and apply for public service loan forgiveness and cancellation, and make us aware of important deadlines. We will take questions at the tail end. Please use the Q&A feature to ask questions, and we'll take as many questions we have time for. Thanks for being here, and now I want to turn it over to our guest speakers.
Hi, sorry, I put myself on mute. Hi, everyone. My name is Cooley. I'm the Targeted Outreach Director for the DFPI. First of all, I want to say thank you to Assembly Member Rebecca Bauer-Kahan for giving us this opportunity to come out and talk to you. There's a lot of really great information about student loans in this workshop. I'm joined by my colleague here, Selena Damian, which is the DFPI's Student Loan Servicing Ombudsperson. She will be talking a little bit later about some more information. But we have a ton of content, so let's go ahead and get started. First, I do want to say that this webinar is being recorded and it will be made available to you after the presentation. Also, the slides that you're looking at right now will be made available as well. So you should be able to download that. If you do have questions, please submit them through the Q&A function on Zoom, and we'll get to the questions at a designated time. It's at the very end of the webinar when we do the Q&A. And finally, all information on this webinar is accurate up to this date. As you may be aware, a lot of things are changing in the, a lot of news updates are happening in regards to student loans, but this is the most up-to-date information as of right now. Okay, let's get right into it. First, I do want to highlight the Campaign for California Borrower Rights. It's a coalition. As Assemblymember Bauer-Kahan said, the Student Borrower Protection Center, Next Gen California, Consumer Reports, and Young Invincibles are all partners in this coalition, and they're leading statewide, students. They're leading this initiative to provide information to student borrowers, parents of student borrowers, and administrators. Okay, I do want to hand it off to Selena Damian, who is our student loan servicing ombudsperson. Selena, take it away.
Thank you, Ku. Hello, everyone. Thank you for being with us tonight. Thank you to Assemblymember Bauer-Kahan's office for having us. This is really important information, and thank you for taking the time to be here. Student loans do affect many of us, people we know, our colleagues, our families, our children. So thank you for being here. Before we get started, just a little bit about what DFPI does. We are the state's consumer protection agency, formerly known as Department of Business Oversight. We license and examine companies of financial products to ensure compliance, and this includes student loan servicers. We investigate consumer complaints, and we take legal actions when companies are not in compliance through our enforcement unit. We conduct education and outreach to enhance consumer awareness and protect consumers from fraud and abuse. Next, please. Some student loan debt numbers in California. We have 4 million Californians that owe $156 billion in federal and private student loan debt. Most of the debt is federal debt. In the years 2019 and 2020, 46% of California college graduates had student loan debt. 35 to 49-year-olds carry the most debt on average. The average debt load of a California borrower is $37,783, although that figure may be a bit lower with the newer figures that new reports that were just released. We're not up at the highest, but it is still pretty substantial. Women do carry more debt than men. Prior to the COVID-19 pandemic, approximately 500,000 borrowers were behind on paying their student loans. And in the United States, student loan debt is now the second highest consumer debt category after mortgages, totaling nearly $2 trillion, and that number increases on a daily basis. Next slide, please. Let's talk about some California protections for student borrowers. California has what we call the Student Borrower Bill of Rights. It was introduced as Assembly Bill 376, and it became effective January 1st, 2021. California, along with nonprofit advocacy organizations, promoted and advocated for this protection, which was lacking on the federal level. Any federal protections for borrowers of federal student loans are established by the Higher Education Act. However, those protections were just not enough, and California passed the Bill of Rights in 2020. It applies to student loan servicers doing business in California, including state licensed servicers, as well as banks doing servicing. You will hear me say servicers a lot throughout the webinar. You'll hear us talk about contacting your servicer, just so you are aware of the difference between a servicer and a lender. The lender is the company that lends, that actually finances the loans. They are the ones that set the terms. They are the ones that set the interest rate. For federal loans, your lender is going to be Department of Education. Your servicer is actually the company that the borrower is calling. They're the borrower's main point of contact, where borrowers call to receive information. They call to ask about payment plans. They send the payments. They receive bills from them. So these servicers are the ones being contracted by these lenders. So this Borrower Bill of Rights applies to those servicers that are helping borrowers when they call for information. This Bill of Rights also applies to borrowers with both federal and private loans. And California is only one of 13 states that has established advanced legislation to strengthen the oversight of student loan servicers and to protect borrowers. What it does, it prohibits servicers from engaging in abusive, unfair, or deceptive practices. It requires that servicers work in the best interest of borrowers and provide accurate information. That's accurate information regarding their payments, regarding forgiveness plans, regarding relief. Anytime a borrower calls, the servicer has to have properly trained staff to assist borrowers. It does establish special protections for military borrowers, borrowers in public service, older borrowers, and those with disabilities. And it established my position as well. As the ombuds person, I work with other state and federal agencies to understand, to just be on top of all the changes, any policy changes, any updates, changes with forgiveness plans. And then I work with, I do outreach such as this one, but then I also work directly with borrowers, helping them understand their options and helping them, try to help them navigate their student loans if the servicer is not available or they're not able to get through to the servicers. Next, please. Before I jump into the updates, I'm going to talk about the two different types of loans. So you're going to have, a borrower will have their federal loans and may have private loans. All these loans, the federal loans, are all accessed through FAFSA when a borrower fills out the FAFSA when they enter the school. Right now, you have your direct loans. Anytime after 2010, direct loans were the only type of loan that was being dispersed. When you have your direct loans, you have your subsidized and your unsubsidized loans. They are the same type of loan, direct loan. The only difference is that an unsubsidized loan, the borrower is paying all the interest since disbursement. So from the time it gets dispersed, interest starts accruing on a daily basis. So this increases the size and ultimate cost of the loan. So you'll see direct subsidized or direct unsubsidized when you're looking at your account data. Then you also have your direct plus loans. These are loans with fixed interest rates, and they're unsubsidized. A credit check is required for these type of loans. You're going to have your grad plus loans. These are available to students pursuing graduate degrees, and then your parent plus loans, which are available to parents of undergraduate studies students. You also parent, and just on a side note, parent plus loans do have higher interest rate, and both the plus loans they do carry an origination fee, so they are a little bit more costly. Then you have your direct consolidation loans. These allow borrowers to combine all their eligible federal student loans into a single loan. So if a borrower has a mix of subsidized direct loans and maybe a grad loan, they're able to consolidate. And consolidation is similar to refinancing. There's no cost to borrower, but it may increase the total balance of the loan. And then you have your federal family education or FFEL loans. These are subsidized loans that are made by private lender and insured by the government. These were discontinued in 2010. However, we are still seeing a lot of borrowers that have these loans. And some of these updates that I will be talking about will apply to borrowers with these loans. You also have your Perkins loans, which are subsidized loans made by schools to undergrad students and based on financial need. They were also discontinued in 2017. However, there are still a lot of borrowers that have these type of loans. So if you went to school maybe in prior to 2010, you may have a mix of loans, direct, FFEL, direct plus loans. So it's very important to start there to know what kind of loans you have to see how you can benefit from these updates. The next one, please. Then you have your private loans. Sometimes once a borrower exhausts all their federal loans, they're able to obtain private loans. These are loans made by a bank, a credit union, a state agency, or a school. These are not funded by the federal government, so they do not offer the repayment plans, the flexible terms, or the forgiveness options that are available to federal student loan borrowers. These often require an established credit record and a cosigner. And once a borrower refinances from their federal loan into a private loan, they are not able to revert that back into a federal loan. So it's very important that you just understand the options if you are weighing or trying to determine whether or not to refinance. It's going to be a case-by-case basis. It's going to be up to the borrower, but one thing we do advise is to exhaust your federal loans first before private loans. Next, please. Now I will get into the updates. I will start with the CARES Act, the payment pause. So under the CARES Act in March 2020, all federal student loan payments were paused through the end of this year. There were 5 extensions, and in late August, the last one was announced. During the pause, all interest rates were set to 0%, and this pause applied to borrowers with direct loans or loans owned by the U.S. Department of Education. So those FFEL and Perkins loans that I was talking about, those older loans, they still continued making payments. During the pause, servicers were required to report to credit reporting agencies as if regularly scheduled payments were being made and reporting monthly payments of $0. Repayments are set to start at the beginning of the year, January 1st, regardless of whether you are applying for the Biden relief, whether you're on track for PSLF, or you think you qualify for any of these programs. It is still very important to be prepared for repayment. There is a lot going on, so these these reliefs, forgiveness, cancellations may not be completed by the end of the year. There were a lot of transfers where federal, big servicers got out of the student loan game, basically. And so there were a lot of transfers done through the pandemic, through the pause. Also, and it's very important for borrowers to go in, update their account information. Addresses may have changed, jobs may have changed. They may need to change repayment plan. Know where you're at with your loan before January 1st. So don't assume that relief is going to happen before then. Just it's better to be prepared. Another change that has been announced is a one-time adjustment to income-driven repayment, qualifying payments for direct loans and FFEL loans. Borrowers will receive credit towards IDR and PSLF forgiveness. In addition to the public service loan forgiveness and this relief that we'll be talking about later on, there is a lesser known income-driven repayment forgiveness where borrowers, after paying on an income-driven repayment plan for a period of 20 to 25 years, they can have the balance forgiven. Due to the mismanagement of the program and just the lack of service or oversight, errors were being done. So in order to alleviate that and to assist borrowers and get closer to forgiveness, the Department of Education will conduct this adjustment within the next, 6 months possibly, to give borrowers more credit towards both IDR and PSLF. So they will be counting any months in which borrowers made payments regardless of a payment plan. They will be giving credit for forbearance and deferment, which is not usually done under any of these forgiveness programs. So as you can see here, 12 or more months of consecutive forbearance, 36 or more months of cumulative forbearance, and months spent in deferment prior to 2013, except for in-school deferment. The Department of Education estimates that it's going to affect about 4 million borrowers, where it's just going to get them closer to forgiveness, whether they're on the IDR forgiveness plan or the PSLF forgiveness track. Next, please. Now we will talk about public service loan forgiveness. Again, this is important to know. All these programs are separate and a borrower can benefit from more than one. The PSLF program was created in 2007 to encourage individuals to enter and remain in public service. Under the program, student loan forgiveness is granted after satisfying certain criteria for 10 years or 120 qualifying payments, which is the requirement. Under the traditional requirements, a borrower has to have the right type of loan. They have to have direct loan, which are those 2010 and forward loans. They have to be under the right type of repayment plan. It has to be an income-driven repayment plan. They have to have the right type of employment. So a borrower can be employed by a government agency. It can be at any level: county, city, state, military, tribal also qualify. It can be a water district, a school district, or a nonprofit 501c3 organization. And then you have to have the right number of qualifying payments, which is 120 payments. So you have to be employed at the same time that you're making payments. And these are the traditional requirements. After the 120 payments, a borrower applies for forgiveness, and then the balance gets discharged. Next, please. And again, then there was a creation of the PSLF waiver. Again, due to the mismanagement of programs, lack of servicer oversight, Department of Education, to alleviate the denials in 2007, there was a 99% denial rate for not meeting the requirements. They created this waiver for a period of 1 year. The waiver, what it does is it suspends, cancels most of the PSLF qualifying payment rules. So borrowers should apply even if they were denied before or do not have 120 qualifying payments. And then we have approximately 130,000 borrowers or more probably that have received cancellation since its announcement. I estimate there's a lot more with the big rush prior to the waiver. Next, please. So what does this waiver do and who can benefit? So it's really important to note the PSLF program is not ending. This information right here is regarding the waiver. So it cancels the traditional requirement of direct loans. Traditionally, under the waiver, only borrowers with direct loans applied. These borrowers with FEL, Perkins, or other federal loans did not qualify. Under the waiver, a borrower can consolidate those older loans into direct loans, and they can receive credit for previous payments made on those loans. Parent Plus loans are not included unless they are consolidated with the parent's own direct loans. That's the only way that a borrower can benefit and include those Parent Plus loans. Employment. The employment requirement is still there. The only difference during the waiver is that a borrower does not need to be currently employed, which is a traditional requirement. This benefits borrowers that may be moved on to private service, or borrowers that have retired but already made 120 payments or years of payment on those older FEL Perkins loans that didn't previously qualify. And then the qualifying payment requirements. During the waiver period, past periods of repayment, whether or not you made that payment on time for the full amount due or on a qualifying repayment plan. What was happening is that servicers were not giving credit to borrowers if they were one day late, 1 cent under. If they were paying ahead of time, they were not giving them the appropriate credit. Certain periods of forbearance and deferment may count. Again, this is going back to that IDR waiver I spoke about at the beginning. So these two programs will go hand in hand. All the COVID forbearance months count towards PSLF. That's about 30 months of payments that a borrower will receive credit when they were not making payments. So this is a great benefit for borrowers. Next. So what does a borrower need to do to find out if they benefit from the waiver or qualify for PSLF? A borrower needs to find out first if they work for a qualified public service employer. Studentaid.gov or FSA does have an employer eligibility search tool where you can enter the employer's FEIN or federal employee ID number, and you will see if they have already been certified through Department of Ed, or if they qualify. If you do not find your employer there, it doesn't necessarily mean they don't qualify. It just means that someone from that agency has not applied for PSLF. I find very few that aren't in the tool or in the search, because I help borrowers and I look them up all the time, and you will see pretty accurate information. Regardless, don't let that dissuade you. Still go ahead and apply if you think you qualify, if your employer qualifies. Then you'll need to know what kind of loans you have. You will need to log on to studentaid.gov, and you can download your aid data there. You will see the word direct, FEL, Perkins, and the best way to know is if you were part of the COVID payment pause. If you were automatically paused, then you know you have direct loans. Everyone else who have to continue making payments probably have those other type of loans. But again, double check through the studentaid.gov page, create a page, an account if you don't already have one. And then once you find out what kind of loans you have, you will know if you need to consolidate or not. Again, consolidation is done through the studentaid.gov website. Because we are so close to the deadline right now, you will not be able to finish both the consolidation and the PSLF process by October 31st. Therefore, what a borrower must do is they have to use the studentaid.gov, both the PSLF help tool to create the application and to consolidate if needed. So both of those actions need to be taken by October 31st. The Department of Education will have a record and of your logging in and your information, and they will still count you for the waiver, or you can still benefit from the waiver. Next page, please. And this is just what the PSLF application looks like. It's only a 2-page application. When you use the help tool, you will be doing this basically automatically, and page 1 will be filled out on the studentaid.gov page. You will save it, download it, and print it. The second page is what the employer needs to certify. I can't stress enough how important it is for these dates to be complete, the FEIN number to be correct. and it does require a wet signature. If you are not able to get in touch with the employer because they've already closed or they're no longer in business, there is a way that you can submit it with that. There's an option where you can submit W-2s, or they're going to require other information to verify that. That process will take longer. I would just urge to really try to get the signature if possible. And to just make the process a little bit more easier. But this is what the application looks like. It's nothing too extensive, but just make sure it's clear, it's legible, and it's complete. Next, please. So that was my portion of the presentation. Now I will hand it over to Ku to talk to you about the Biden student loan relief.
Thank you, Selena. Really great. A lot of really dense information. I do want to make sure to remind everyone that if you do have questions, please feel free to submit it into the Q&A section of Zoom. Submit your questions, and at the very end, we will answer them. I answered one question already, but feel free to keep adding them in. If we have time, we'll try to answer them as we go as well. I do want to make one big distinguishing factor here. Selena was talking about public service loan forgiveness. The acronym is PSLF. What has been recently announced in August by President Biden is the Biden-Harris administration's student debt relief plan. And that is the one where they're proposing to provide up to $20,000 of debt relief for federal student loan borrowers, right? So there are two different programs: public service loan forgiveness, also known as PSLF. That's an ongoing program that will continue to go on. The waiver deadline for that program is at the end of this month. However, the Biden-Harris student debt relief plan, the application, when it becomes available, it was announced that the application would be available early October. Because of all the lawsuits that have come out, the Department of Education has decided to push the application launch date closer towards the end of October. But once it becomes available, it will be available to all individuals who want to apply for it until the end of next year, so December 31st, 2023. And so again, two different programs. Public service loan forgiveness, that is an ongoing program. It will live until legislature decides to kill it off. The Biden-Harris student debt relief plan, that application, when it becomes available, will only be available from here on until the end of next year. So just a little bit of details about the proposed plan. It'll be available for those who have a federal student loan. There are eligibility requirements. The proposal is they're proposing to provide debt relief of up to $20,000, depending on a borrower's income and Pell Grant status. You must apply for the debt relief. Well, that's not true. Some debt relief may be automatic, and in fact, if you don't want to get debt relief, you could actually go on the studentaid.gov and actually acknowledge that you do not want to have student debt relief applied to your student loans. But for most of us, we'll have to apply for the program. Also, the amount of debt depends on whether the student borrower received a Pell Grant in college. So even if you received one Pell Grant for one semester, or if you received multiple Pell Grants per year, as long as you received one Pell Grant, then that means that you are eligible for the $20,000 debt relief. Now, there are other income requirements. So, for instance, individuals who made $120,000 or less, and that's for the individual, or couples who made $250,000 or less are qualified. And it's for 2020 and 2021 income tax year. So those are the 2 years. And when you apply, you're supposed to use whatever year makes you, better qualified. And to learn more about your Pell Grant status, what kind of loans you have, you want to go to studentaid.gov, make sure to log in, and it'll have all the information about the type of loans you have, plus when you received a Pell Grant, how much Pell Grant you actually received. And if you do want to learn more about the Biden-Harris administration's student debt relief plan, we've also provided a link here, right there, more details. Again, these slides will be made available after the presentation, so you can click on it and go directly to it. One more thing, two more things. Student loan repayments will start back up next year. That's part of the administration's plan. And also the income-driven repayment plan, also known as IDR, is going to be revamped with lower payments. Okay. All right, next slide. All right, so in this chart, we have done our best to try to, there's always a lot of questions about, is my loan eligible for debt relief? We get a lot of those questions. So we built this chart to try to help, define it a little bit more. Federal direct loans dispersed on or before June 30th of this year will be eligible. What does that mean? That means that if you got a loan dispersed after June 30th, so like July, August, whatever, that amount will not be eligible for the student debt relief. But anything before, any loans that federal student loans that were dispersed before June 30th of this year, whether it's subsidized, unsubsidized, parent plus, direct consolidation, those type of loans will be eligible for the debt relief. Other loans held by the federal government that could be qualified, nearly all federal family education loans, also known as FFEL loans, could be qualified. So there's a caveat here. Basically, FFEL loans that are owned privately. So the federal government might be the servicer, but then the loan is privately. That one will not be eligible for debt relief. And then federal Perkins loan held by Department of Education should also be eligible. Also, if you have defaulted loans, so subsidized, unsubsidized, any of your defaulted loans that are owned by the Department of Education, or commercially, or owned commercially, those will be eligible for debt relief as well. Okay. What can you do to prepare for student debt relief? We get a lot of questions about when is the application going to be available, how can I apply, that kind of thing. To be honest, we don't know yet. The Department of Education says later this month, which is October, they will be providing the application. It'll go live. But to know as soon as they will launch it, you want to go to this link we provided, right? www.ed.gov/subscriptions. You want to subscribe to them. As soon as they make the application live, they're going to send an email out to everyone who subscribed to them that the application for debt relief is now available. You can also subscribe to the DFPI's newsletter. We have a monthly newsletter, and definitely, and we're keeping a very close eye on the application. And so as soon as it becomes available, we're going to also send out an announcement to everyone who is subscribed to our newsletter. And there's our link to subscribe to us. You also want to be aware of your income eligibility. So whether you want to use your 2020 or 2021 tax year income tax, you want to make sure you're prepared for that, right? You might have the W-2 or 1099, whatever it is you use. You might want to just make sure you have that ready to submit as part of the application process. Also, log into your studentaid.gov account. You want to verify your contact information, right? You want to make sure you have the correct email address, the phone number, the correct mailing address. You want to make sure all your contact information is accurate. So when the Department of Education sends out a notification, they're sending it to the right person, right? Also, in your studentaid.gov account, you can check your Pell Grant status, right? Whether you received one, how much you received. You can also check what kind of student loans you have, how much student loans you owe, that kind of thing. And also you can determine you could find out who owns your student loan, right? Or your servicer, who is servicing your student loan. And finally, if you don't have a studentaid.gov account, you can create one. The process takes a little bit because they have to verify your identity. So you definitely want to start you want to get ready before the application launches, because you don't want to create an account but then have to wait 48 hours for your identification to be verified to submit your application. So again, really great thing to get started on. Okay. Student loan scams. I'm going to hand this back off to our student loan ombudsperson, Selena.
All right, thank you, Cool. Thank you for that information. One thing that we may not think about with student loans, but we know it's happening and we want to make sure that all borrowers are aware. And as Assembly Member Bauer-Kahan mentioned at the beginning, student loan scams are right now, scammers are on overdrive. So it is very important that we know where to go, where to get the information. What they are doing is they are reaching borrowers by phone, emails, text. They're sending mail to people's homes with official looking logos, and they are offering to provide fast forgiveness. They are offering to help you with the application, saying this is a one-time offer. If you don't do it, if you don't respond, or if you don't call back or give them an answer, that you will miss out. They can be very pressuring on the phone. What they want you to do is they want you to provide them your FSA information or personal information. They can ask that you sign up for like a subscription service. I just had a borrower who actually signed up and they promised 60,000 of relief, which I'm not sure where they got that, but 60,000 of relief, and the borrower had to pay about 300 a month for 3 months. But that you shouldn't have to pay for forgiveness for any help. Next option, next slide, please. Yeah, there's nothing a debt relief company can do for you that you can't do on your own for free through studentaid.gov. These companies may be legit companies, but really all they are like document processing or application companies. They don't understand student loans. They don't understand what's going on, all the options. So they may not even be able to assist you. Remember, servicers and the federal government are not going to call you on the phone. They don't have the time to call you 3 times a day, to text you. If you want access to these programs, you have to log on to the website. You have to call the servicer yourself. They will not be calling you. Sometimes they have very legit names. So really, they've even contacted me and they have names that sound like they could be affiliated with the government, but they're not. We really want just to ensure that borrowers are aware, especially those that don't speak English, those that are elderly. They really are trying to take advantage of borrowers' confusion. As we've mentioned various times, studentaid.gov is the website to go to. Call your servicer. Right now, wait times are long. I've heard borrowers are waiting 2 to 3 hours to get any information. So really know where the accounts, like the online portals, go to their FAQs. They're trying to keep up with the information as much as possible. Studentaid.gov changes their FAQs on a daily basis as needed, or you can contact us, but do not sign up for anything. Do not give them any personal information because you could be a victim of identity theft, and it is very hard to get any of the money back, even if they offer refunds. Next page, please. If you do encounter a scammer or not sure who's contacting you, you can go ahead and file a complaint with us. Well, you can email me, but you can file a complaint with us if needed. The Consumer Financial Protection Bureau, CFPB, is also taking these complaints. Even the Federal Trade Commission has put out alerts. FSA is putting out alerts because it really is rampant right now. So we want everyone to be careful. And then I'm handing it back to Ku so he can go over some more just resources and contacts for us.
Okay, great. Thank you, Selena. All right. So the DFPI has created a web page that houses a ton of resources. So not only does it have a list of the different events that we host, for the rest of this month, as well as next coming months, but it's got a ton of different organizations, nonprofits, legal aid groups that provide assistance to student loan borrowers. So please check it out. The first link there, www.dfpi.backontrack, is that webpage. I'm sorry, that link is wrong. It should be dfpi.ca.gov /back on track. I'll fix that. But yeah, that goes to our webpage. It's got tons of resources. We've also been recording webinars for the last 9 months, basically. And we have a YouTube channel with all of our webinars that we've recorded. We have our first one called "Get Help with Your Student Loans." We have a number of nonprofit and legal groups come on and they talk about the work they do and how they can help student loan borrowers. The next webinar we talked about is just going over some student loan updates. This is a big one. It's probably the most popular one. I think we have almost 5,000 views. It's our public service loan forgiveness workshop. We, with the Consumer Financial Protection Bureau and also the the Student Borrower Protection Center, came together to do a walkthrough of the public service loan forgiveness waiver application as well as program. It's a great video. Again, it's an hour long, but we walk you through the process. And then the last two webinars we talked about student loan updates and different repayment options. And then the most recent one is understanding student loans, where we go a little more in depth about the different types of student loans out there, and also the steps you need to do to apply for loan forgiveness. Finally, if you're looking to apply for public service loan forgiveness and just need a place to get started, our coalition has put together a website, www.forgivemystudentdebt.org. It's a great place to just get started, get all the information you need, and get going. And again, I've talked about subscribing to the DFPI's newsletter. We have a lot of really great information, not just about student loans, but consumer alerts and news releases and things that affect California consumers. And finally, the Consumer Financial Protection Bureau, also known as the CFPB, has a number of tools to help borrowers get started on their loan forgiveness. So again, this will be made available to you after the webinar. Tons of resources. Please go check it out. And finally, a couple different very important reminders. I want to make sure that I don't miss this. Number one thing, public service loan forgiveness waiver deadline is October 31st. It's the end of this month. You have a little bit more than 2 weeks to complete the public PSLF help tool. So make sure, if you were even just thinking about it, maybe you don't know if you have enough payments or you don't know if your previous employers are qualified, just go there, start the help tool. Doesn't cost you anything. You're going to need to log in, have an account with studentaid.gov, but just go in, start the tool. It'll walk you through it. It's very simple. I've done it. So it's not anything difficult. It's just get the help tool, complete it, and then from there you could decide whether you want to try to get employer certification done or work towards it. And at the very least, again, if you don't make the waiver deadline, you could still apply for this public service loan forgiveness program. Even if you've only made 2 qualifying payments, you could still qualify for the program. So again, go in there, look at the tool, get yourself started. Also, student loan repayments start up in January 2023, next year. The payment pause ends at the end of this year, so you want to do a couple different things. Again, I want to reiterate, you want to make sure your contact information is updated in studentaid.gov, because when the student loan repayments start back up again, they're going to send you a notification. They're going to say, this is the amount you owe, this is when you need to pay it by, this is the principal, interest, all that kind of good stuff. So again, you want to make sure your contact information is updated. During the whole pandemic, you might have moved, changed address, changed emails. You want to go in there, make sure all your information is accurate so they can contact you. Also, if your loans are in default, you want to make sure that you follow the Fresh Start program. It's a program that was announced earlier. They're still trying to work it out. From what I hear, it's going to be launched early next year, probably January, February. And basically, it's going to get your loans, if you are in default, it's going to get your defaulted loans back into good standing. So one of the most important things to do is, if you have a defaulted loan and they get it into good standing again, you want to try to keep it in good standing. So you're going to have to do things like, one, apply for the Fresh Start program, but you also want to make sure that you get the right repayment plan set up so that you keep your loan in good standing. And again, update your contact information. Again, more updates on the Biden-Harris student debt relief plan will be coming soon. Make sure to subscribe to us to get the latest information. And there's that link, dfpi.ca.gov/subscribe. We will send out information as soon as it is made available. Okay, we are right at about 6:47. The Q&A session, and I think Selena's done a really fantastic job answering a lot of these questions. I do have a couple of questions that was emailed to me before the workshop started. So I am going to go ahead and bring these up. Maybe Selena could help me answer these. So first question, I'm concerned some private loan companies for student loans may be overcharging on interest. Can we have someone check into this? Selena?
Yeah, so unfortunately with private loans, the federal government cannot, or any government really, can regulate how much interest they charge, because those are private loans from a bank or a another type of lender. That's why we do say to try to try to keep those federal loans, because those rates are fixed. So the only in that case, what I would advise is really call the lender and find out, tell them if there's borrowers having problems making payments, or they have to, under the Bill of Rights, they have to help them avoid default or avoid delinquency, because even in private loans, you do have defaults. So a borrower should be able to call the servicer and say, hey, I'm having problems. They may not lower the interest rate. They don't have to by law, but they should be able to help the borrower. And if not, they can always contact us. We can sort of be that mediator and ask through us, because they do have to respond to a borrower. So part of the Bill of Rights is that a servicer has to respond within 15 days if there's a question or a concern or a complaint through us. So if they cannot receive any help as far as payments or trying to help them avoid default, they can contact us. But as far as the interest rate on private loans, Department of Education, they cannot set those terms, set those interest rates.
Thank you, Selena. And I will say that if a private loan company or even another loan company is overcharging interest on you, and you believe they're charging more interest than what you originally agreed to, you definitely want to submit a complaint to us. We will investigate and find out what's going on, right? All the details, all the information could be submitted to us through the complaint, and we have investigators that can look into that. I do have two questions that jumped up right here. There is some ambiguity around undergraduate versus graduate loans. What I've read is that graduate loans are eligible for up to $20,000 under debt relief. However, I can't find any info on new IDR cap of 5% that only applies to undergraduate loans or not.
You want me to take that?
Yeah, please.
Yeah, so the relief is not, it's not based on your undergraduate or graduate status. It's just direct, as long as it's a direct loans. So you have to have the direct loan, meet the income requirements, and then you go and you determine whether or not you had a Pell Grant, and that's where you'll know whether you're eligible for the 10 or the 20. But it's not limited to undergrad or grad. It just has to, it's the direct loan. So that's regarding the first part. And then can't find any information on the IDR cap. They haven't right now. Those are proposed regulations. That part of the plan was released with the relief plan, but those are still in the what they call negotiated rulemaking process. We do anticipate those passing. Again, we're being very positive and hope that those will be in place July 1st, but there will be more information. Right now there is not too much, because these are all proposed regulations that could change. If you're really interested, there actually is about a, I don't know, 400-page report deep down in the FSA website. You can email me and I can find that for you and send it if someone's really interested in knowing what's going on. But those were open for public comments as well. So it's important that everyone knows that. That's regarding the new IDR plan, which is talks about capitalization, interest, and a new forgiveness plan. So it really, these are really good things for borrowers.
Thanks,
And
Selena.
then the second one, I'm just gonna, if Mohila has my loans, does that mean there is already an FSA number? No, if Mohila has the loans, it just means that they're your servicer. So I'm not sure what the FSA number is, but it's student aid, the studentaid.gov is separate. So you would want to go in and try to create an account with them and then see if they ask for the FSA number, but I'm not sure where, yeah, I'm not sure if them having an FSA number means you already have a studentaid.gov account. So yeah, just go ahead and log on, and then with your, as long as it's the email, the same email is being used, you'll be able to retrieve your password. But no, just because Mohila has your loans and is your servicer doesn't necessarily mean you have a studentaid.gov account.
Yep, I'll add on to that. You should just go in and log into studentaid.gov. If you don't have an account, you could create one. Even if Mohila is your loan servicer, studentaid.gov will have the details about your student loan. The only time they wouldn't is if it's a private loan that Mohila issued to you, right? So if you took out a private loan from Mohila, studentaid.gov wouldn't have any record of it. But if it is a federal loan that is owned by the Department of Education and Mohila is the one servicing it, you could go to Mohila to pay them for it, but studentaid.gov would have the details of the loan as well. The reason I know this is because I have a separate student loan servicer, and then I have a studentaid.gov account that I go to, and I could look at all the details of my student loan. So
yeah, and Mohila is the current public service loan forgiveness servicer. So when a borrower consolidates and applies for PSLF, they do get transferred to Mohila. So they're right now servicing all PSLF borrower accounts.
okay, great. I do have two more questions that was emailed to me. I'm gonna really try to. It's a long question, so I'm gonna try to summarize it. I think it would be good to know what percentage of student loan monies are being used by students for food and rent. This may be a hidden issue. This might be a bigger issue. Okay, so the way student loans are dispersed is once a borrower signs for the loan, that loan is then the money is then taken to pay off the usually the tuition, right? Sometimes books as well. But most of the times, any kind of debt that the student might have, whether it's housing or housing provided by the campus, or any kind of bills that the student would student borrower would have because of their education. So housing, food, all that could be wrapped up into their tuition, and then their student loan would pay off all that. Anything extra would go to the student, and then the student could use that for whatever, right? Sometimes it's a good idea, sometimes it's a bad idea. I know a lot of students that take out the money even though they don't borrow more than what they need, and they use it for frivolous stuff. Some of them use it for things that they do need, right? So paying for rent, repairs on a car, something like that. So you say that it would be good to know what percentage of student loan money is being used outside of tuition. I agree, but there's really no way to track that unless it's voluntarily that kind of data is given. Selena, you wanted to talk?
Yeah, and I was just gonna go through a lot of data research, and I haven't seen one that's that specific. It's it would really have to be maybe up to, and all schools are going to be different, so really it's going to depend on whether a borrower's living on campus, off campus, but I haven't seen one specifically that has that information specifically.
Thanks, Selena. Okay, so no other questions yet. I know we have a little bit more time. There's one last question that was emailed to me. Again, I'm going to summarize it, so don't get offended if I'm didn't read the question verbatim. So basically, it says we need to figure out what for-profit colleges are doing, not offering good education to student loans, taking advantage of student loans, and not giving them qualified certificate, degrees, or skills. Okay, so I agree. I agree that we should try to and there's a lot of mechanisms in place. I'm not saying it's the greatest things in place, right? When we talk about accreditation. We talk about career counseling. There's a lot of mechanisms in place. They're not the best. It's really difficult, and it becomes kind of, especially for students who are first generation college students. I'm a first generation college student myself. It is a very difficult system to navigate, especially when you're trying to find out what is it a good degree, what kind of degree would lead to a job afterwards, right? What are good skill sets? And then obviously, what are good education programs and colleges to go to? It's very difficult. And I am not 100% sure that we can answer that here. I know Selena wants to put a comment on it, but I would say when I went to school, I leaned very heavily on my career counselors, whether it's my high school career counselor, whether it was the college career counselor, whether it was my college advisor. I leaned heavily on them, and I asked them, "What am I? Is this correct? What am I doing? What would you do?" Right. And that's kind of, again, from a first generation college attendee, that's the way I was able to navigate it. Selena, hand up.
Yeah, I think, and also I want to add is that the Department of Education is and the states are aware of these for-profit colleges and their predatory practices, which is really what they are. You may have heard, so along with all these other forgiveness programs, and you're going to hear the Navient discharges. All these big, large, bulk borrower defense discharges are against or are for borrowers that attended these for-profit colleges. The Sweet versus Cordona settlement, that has to do with all those Ashford, ITT Tech, the Art Institute. So if these are to alleviate or to help, and they're forgiving, they're just canceling across the board borrowers loans discharges that they attended these for-profit colleges, because they've already seen research, they've already seen the numbers that they were fraudulent, they were predatory, targeting a certain, again, those first generation people of color, over promising. So there are other discharges related for federal loans that are, if they acted fraudulently, if they basically closed the school while they were attending. So it's going to apply to these for-profit colleges. And one of the biggest for-profit accreditors actually just was taken, their accreditation was taken away just maybe within the last month. I don't recall the name, but again, this was one of the largest accreditors accrediting all these for-profit colleges. So we are aware of it, and again, that's why we're here trying to do some of these some of this outreach and just letting people know what their options are and really helping people understand, because I think that lack of confusion and understanding is what led to this crisis where we are now.
Okay, thank you. Thank you, Selena. I know we're right up at the end of the hour. I do want to highlight Selena's information. She is the DFPI's student loan ombudsperson. Here is her contact information. If you do have more questions, or wasn't able to submit your question to us, please feel free to contact her. She's fantastic and she does great work. She answers as many emails as she can. And again, I do want to say thank you to Assembly Member Rebecca Bauer-Kahan for the opportunity to talk to you all, and thank you for coming out and listening to us talk about student loan resources. We hope you are able to help yourselves.
Thank you for having us this evening.